My name is David Wolfin, President and CEO of Avino Silver and Gold Mines Limited. I grew up in the mining industry and finance industry. My father founded the company and worked in the field of finance. I worked in the mine at Avino as a teenager and learned the mining business from the ground up. And then later worked in the stock market in Canada. Eventually joining him in the 90s, and then becoming president and CEO in the 2000s.
Since March of last year, your share price is up more than 5 times, an incredible performance. So this means a lot of listeners or investors that are listening to this call have probably made a lot of money. And also, so what would you say to investors that are considering to take profit, or investors that feel that they missed on this big run?
It's always prudent to take profits. So I would suggest if people want to get their principal back, that would be a wise thing, and they could let the rest ride. I think that the share price has done well. We're the number one performer in our peer group over the last 12 months, but we're just bringing on our second mine. So, that's not reflected in our financials yet. So at current prices, things are looking pretty good from our current mine, which is lower grade than La Preciosa. So good times ahead. But I wouldn't tell anybody not to sell. It's a liquid market. It trades a lot of stock. You can do whatever makes you happy.
So how would you say that Avino stands out if you compare yourself to your peers?
Well, we're pure silver play, 371 million ounces of silver equivalent. A lot of that's undeveloped. So we've got one of the largest resources of our peer groups. And the three darlings have recently been acquired. So Silvercrest, Gatos, and Mag. So the spotlight is now shining on Avino, and we're bringing on our second mine right now. We have a 5-year plan to grow our output by 3 times. So this is what makes us stand out. And also longevity. We've been in business for over 50 years. We've been involved with Avino, so we know it very well, and have many, many decades of experience in this region.
So thank you for being here today, Nathan.
Thanks for having me.
So, could you tell us, who are you, and tell us a bit about your career?
So, my name's Nathan Harte. I'm the Chief Financial Officer for Avino Silver and Gold Mines. I've been with the company now over 8 years, and in this role, coming up on just over 5 years on a permanent basis. So my background is mining industry for over a decade. Worked previously for one of the big 4 service firms, with lots of mining clients all around the world. Traveled to Africa, South America, all over North America, and into all sorts of operations, production, exploration, development, you name it. And so now with Avino and working through producing operations, and now we're in development as well too. So lots of good experience in the industry.
How long have you been with Avino for?
It's been almost 9 years actually. I've been CFO since late 2018. Yeah, it's been quite a while.
So could you summarize what production did you have in Q1?
Yeah, so we had about 680,000 ounces of silver equivalent, being split with copper, silver, and gold. It was pretty consistent quarter, puts us in the mid-range of our guidance, and sets us up well for the rest of the year. We produced about just shy of 300,000 ounces of silver, about, I think, 2,200 or 2,300 ounces of gold, and then about 1.6 million pounds of copper.
Could you summarize the financial results of Q1 and also your current financial position?
Yeah. So we had our earnings go out just a few days ago. So cash was fairly constant. We have about $27 million at the close of Q1. As of right now, that's closer to in the 30s. So that's been positive. We had 4 cents earnings per share in the quarter. Generated again some significant cash flow, and yeah, the mine was operating at fairly good margins. So looking to build on that for the rest of the year.
What EBITDA did you have, and Also, what gross or revenues did you have?
So EBITDA was just shy of 10 million, I think. I believe it was a quarterly record actually for, I think it was 9.8 million, if I'm not mistaken. And adjusted earnings were about the same. So it was about 7 cents a share, which was fantastic. Revenues were just under 19 million. So I think our second highest quarter in history, after last quarter, of course. And yes, kind of where we expect to be with these metal prices.
Now with the share price well about $2 a share, how are you thinking about using the ATM program?
So we actually, in concurrence with our with our financials going out, we filed a shelf in the US, just updating housekeeping business. Our current shelf had the registration statement had actually expired because we're subject to the Canadian rules, which is 25 months. You have to file a new one. So that went out just a few days ago. We'll be putting a new ATM in place, but as of right now, there's no significant plans to use it. We did a little bit in April when it was above $2 as on our way up as we hit 52-week highs. But as of right now, we feel pretty comfortable with our cash position. Having said that, we are looking to see what we can accelerate with La Preciosa development, as well as maybe move forward a mill expansion. So we're just kind of evaluating what any use of proceeds would look like if we decide to use it.
Could you summarize the cost metrics for Q1? Cost per ton, cost per silver, cash cost per silver equivalent ounce, all-in sustaining costs?
Yeah, so cash costs per silver equivalent ounce was one of the lowest probably since pre-COVID, I want to say. We were $12.62 per ounce, which, in a $33 silver market is pretty fantastic. And then our all-in cost per ounce, sustaining cost per ounce was about $20. We did have some sustaining costs in Q1, but we kind of expect, and what we messaged to the market was we'd try and be around that $20 range for 2025, assuming, our cost structure remains intact. And we've done some things to protect that as well too. And as we get, I think cost per ton was about $52 cash cost per ton, and that's been fairly consistent. We've been between $50 and $55 cost per ton, kind of in the last 4 or 5 quarters or so, with the Mexican peso being where it is. So that's been very positive for an underground mine.
All-in sustaining costs, as I said, they're down there at $20, a silver equivalent ounce. What do you expect it to come down to in Q4 and also in next year, when we started to see the real impact of La Preciosa?
Yeah, so I think Q4 we'll see if there will be much of an impact from La Preciosa. Obviously, we'll have development costs on the way too that'll kind of be baked in there. So it's really 2026 where we'll see more of an impact from La Preciosa. We do expect it to come down. It'll just really depend how many ounces I guess La Preciosa is able to contribute as we ramp up. But the goal is to be, again, under $20 for 2026 and get down into the mid to high teens. And then, but yeah, I expect 2026 will be more of an impact. I don't expect a huge impact on the cost structure from La Preciosa in 2025.
Do you expect all-in sustaining costs to vary throughout this year?
No, still stick around $20, but I just think the impact of La Preciosa won't drive much until really 2026.
How much do fluctuations in the strength of Mexican peso impact your earnings? They have strengthened a bit in the past.
In the past few weeks, for sure.
Yeah, recently, yes.
I was actually just looking at a mark-to-market report on our hedges between the USD and peso. So we put out when it went up to about 21 to 1. The USD strength got quite strong after the election for a bit there. We implemented a hedging program where we actually hedge about 50 to 60% of our weekly peso requirements. And most of those are actually locked in with, a rate of around 21 to 1. So even down here at 19.5, we're pretty well protected on most of our costs. So yeah, I was just looking at a mark-to-market report, and it's obviously in a very positive position for us right now. Having said that, there will be some impact, I guess. At this point, not a material impact. But if it goes down to back down to 16 to 1, where the peso is quite strong, sure, that'll have a bit more of an impact. But I think we're well protected compared to some of our peers, probably for the next 12 months.
What measures are taking to reduce costs?
So measures to reduce costs from our side, we are basically, hedging is probably the top one. And then after that, it is probably just avoiding downtime in the mill. I think we put in a lot of, made a lot of effort. Our team has it. Basically putting in redundancies in our mill process so that we avoid downtime. I mean, that's the best one for us, is just avoiding downtime in the mill. If the mill's running at, a much better run rate, then obviously we expect that reduces costs on the, obviously you've got fixed costs and variable costs. And then if you can reduce how many, or increase the amount of tons you're running through, obviously your fixed costs over that are a lot less per ton.
You had 1,865 tons per day milled in last quarter. So what do you expect for the coming quarters?
Yeah, we expect to be a little higher than that for sure. We did have a few down days. I think we talked about that in our production release too. We had to replace the draw crusher, and so that was about probably 4 or 5 days. But given it was such a significant replacement, the team did quite well. We obviously minimized downtime from a pretty significant upgrade. So I would expect it to be higher for sure. I think we saw it up, well above 2,000 in, I think it was Q4, where we were up at around 180,000 plus tons for the quarter. So we want to be well up in that range again too. Obviously, we have maintenance days. The Avino material is quite abrasive and does have some impact on the mill. So running, we run generally with about 85 to 90% availability on the mill, and that's probably about as good as we can get it. So 2,600 tons per day times 90% availability over the quarter. That's about as good as we can get as of right now. So we hope to be close to that. I think we can we'll be above 2,000. I think the goal is to be kind of in that 2,100 probably once you average it out over the days. But yeah, I think we want to be at about between 85 and 90% availability, including all the maintenance days.
How do you expect grades and recovery rates to vary over the year?
Gold is always the one that varies a little bit. We did touch on this on our earnings call, where it was a bit improved in Q1, and it really depends. We do go in and out of a gold lens that runs through part of the mine, and so sometimes we're in sequence, sometimes we're not in that sequence. So we do expect to see some up and downs, but I think what we saw in Q1 should be fairly similar to what we expect for the rest of the year. Maybe a bit of an increase in silver and maybe a couple points down in gold. I think historically we've been between 86 and 88, around that for silver and copper recoveries, sometimes as high as 90, but generally between there. And then on gold, usually in the low 70s. I think we hit 75% this quarter, but I would expect 72, 73 moving forward. And then I guess on grade, so gold again is the variable one, but silver and copper usually are fairly consistent, kind of around that 50 to 60 grams silver, and then about 0.5% copper.
I guess we could start with La Preciosa. If you could just give us a development update on La Preciosa.
Yeah, we started breaking ground this year. We got the permit, so that really opened everyone's eyes. They were waiting for that news. We're between 60 to 90 days away from intersecting the first vein, Abundancia, and then Gloria vein. So these are the two veins we're targeting right now this year. And so it's not a long wait to get into ore. There will be some development ore, which we will stockpile. We want to get a decent amount stockpiled before we start processing it through our plant.
Okay, so in other words, feeding ore to the mill, that's probably something late Q3 or...
Yeah, late Q3, probably more in Q4.
So from Q4 we should see... Q4 will be the first quarter we will really see the impact.
Yes. So perfect. It's relatively quick. The veins had come right to surface, and it was only 350 meters to intersect them from surface, so it's not very far. So this is the beauty of this property.
50 to 60,000 tons, that's the goal to process from La Preciosa. Is that true this year?
It's possible, but I would be more conservative. I'd say, 30, half of that 30, 25 to 30. You don't know what the ground conditions are going to be like. If things go well, it's possible. But next year is going to be the real breakout year for La Preciosa.
I mean, what kind of run rate in terms of tons per day from La Preciosa will you exit
We're
this
planning
year
to
with?
get to 500 tons per day at this point. But since our financial statements have improved significantly, we were recently at site talking to the engineers and geologists about accelerating that program and looking at even bigger.
Let's go to La Preciosa. I think it would be good if you could remind everyone what's the grade profile there and also recovery rates.
Yeah, so we've obviously got the resource grade that is public, that is about 200 grams silver, and that's using about an 80% recovery rate, which we've obviously done tons of metallurgical test work on. Having said that, a lot of that is from Martha, which was the flat-lying vein that Coeur was planning to open pit. So the two veins that we're targeting, Gloria and Abundancia, which there's about 4 or 5 million tons there between the two that we can access based on our development plans. So those two have about an average grade closer to 300 grams silver. And we're actually in the process of, we're going to twin and do some new drill holes on those veins to get a bit more indicate. We think there's more upside there. So, and we want to be able to actually model that and include that in our grade estimations. We do expect to be surprised a little bit to the upside, but as of right now, we're internally, and what we're using is about 300 grams silver. And recovery rates, 80% is the baseline. We've seen as high as 85. So, Again, we're using for our internal plans and what we've kind of messaged to the market has been about 80%.
Do you get any gold byproduct credit there?
Yeah, there is some gold there. It's about, as high as half a gram in some spots, but it's about 0.3, 0.4. So it'll be, it'll add though. It'll probably be about 15%. We'll get maybe 15% credit on that. So of the total payable amount, so that's still pretty good.
And you're guiding for 13 to 18 million US dollar in capex this year. You spent 2.3 million. So which quarter in Q1? Which quarter do you expect to be most capital intensive?
Well, Q2's as we started development really in Q2 at La Preciosa, like that's the spend has really started on that side, and then obviously Avino's more consistent throughout the year. I would expect Q2 and Q3 to be slightly higher. On a consolidated basis, kind of closer to 3 to 4, maybe this quarter, and then same next quarter, and then rounding out the year probably again closer to the level from Q1. But yeah, so that would put us right in the middle of the range, I think. So I would say Q2 and Q3 will have a little bit more spend, but again, nothing outside of our budget, nothing really that we obviously don't have the capital for.
Could you give us a summary of the Oxide Tailings project, which was a long time since you spoke about that? Technicals, financials.
So our third asset that is obviously got a pre-feasibility study on it. So we put that out in about just over a year ago. Obviously metal prices were a lot different then than they are now. So the economics have changed significantly. So when we put it out, it had, it's an 8-year mine life, $49 million capex, and the return on it was about 60 to 65 million NPV after tax discounted. So it paid itself back in about, I want to say 3 years or so. But again, very low cost. It was about $10 all in sustaining cost per ounce for the life of the project. Again, very low capex. But at current prices, obviously now it's about 150 million NPV. So obviously the economics changed a lot better. The IRRs, I think, around 50%, and it pays itself back in under 2 years at spot prices. So we are pretty excited about that project. But again, La Preciosa is the focus right now. It's something that we want to do, but our focus has just been elsewhere at this time while we move forward with La Preciosa. and then we'll switch over to the Oxide tailings and make some more decisions on that probably early next year.
What permitting exercises remain if you want to move it forward?
Yeah, so that's the big one. Obviously, we would have to get a cyanide permit because it is dynamic leaching, not heap leaching. So it's not like out in the open air. Everything's tank contained, so it is a lot easier to discuss with local communities, and we've started some of that engagement already. We have an area where we know we can build it. That's obviously our land permitted. So I think the big one would be we'd have to go get obviously a cyanide permit, which won't say it'll be the easiest thing in the world, but it's also not insurmountable.
What's the timeline and next steps for the Oxide Tailings project?
So the next step, it's community engagement and just making sure that we have the full sign-off before we make any submissions to the environmental authority. So we'd have to discuss that with the ejidos that in which the land is actually situated on, and so it's right near Avino, so it's nothing new, and we've discussed this project before with them as well too, so we don't think that'll be a big issue, but obviously we want to make sure that we come up with an agreement that both parties are happy with, and then obviously we have to submit our environmental permits for that. So I think the first step is finishing up the community stuff, which again we've been more focused on La Preciosa, to be perfectly honest, and only have so many resources that we want to spend our time on. So I think that one is probably again we're looking at nothing really other than community engagement this year.
And have you drilled anything yet in 2025? And could also reiterate the exploration plan for this year?
Yes, we're on our third hole. We're drilling on the Avino mine, the ET mine. From surface below the bottom developed area of the mine. The plan was between $1 to $2 million worth of drilling, but we're already considering expanding that because that plan was put together in our budget, which was conservative. Now our balance sheet is much stronger. We're looking at increasing the drill program.
Do you have any expectation on how much you will increase it with?
No, it's just based on success. So if we keep drilling, we keep hitting, we're just going to keep going. So it's not unlimited. And it'll be a few, we're saying 1 to 2 million, maybe it's 3 to 4 million. We're also considered drilling over at La Preciosa. So we want to do some infill drilling on Gloria and Abundancia, because when Coeur and Pan American, they all drilled it up, they were considering a giant open pit mine. And so they weren't focused on these two veins. They were looking at more of the Martha vein, but we're focused on La Gloria and Abundancia veins. And the intercepts that we've looked at are much higher grade than the overall resource grade. So we want to go and test and see what it could be. It could be much better than what's been reported.
And in terms of assay results, when do you expect to release? Do you have any timing on the first batch of assays?
I don't. It really depends on the lab and how many batches we put in at a time. So stay tuned.
Okay, so you have also talked, you mentioned, you have a very strong financial position, so you could accelerate expansion plans. Could you add some color to that? Are you looking to expand the mill, accelerate development at La Preciosa?
Yeah, well, our engineers are looking into that now because we didn't want to upset the permitting application, so we remained with one decline. And so we're considering, can we amend the permit and put in more declines to, access the mineralization faster on a larger scale? Or do we wait until we get underground and then branch out from underground? So then no new permitting is required, but it takes a little bit more time. In the mill, we already know what 1,000 tons per day expansion is, about $10 to $15 million. And so we already have that in the back of our minds. But right now it's just planning phases. Maybe we consider even bigger than that. But at the moment, internally, we're just looking at stepping up gradually with the funds that we have. Because we're currently drilling, it doesn't make sense to bring in an outside engineering firm to reimagine everything at this stage. Possibly after we finish drilling, we may bring in an outside engineering firm to help reimagine the whole thing on a much larger scale. But based on our capability, we're just looking to ladder up based on what we've done in the past. So we added Circuit 3, that was 1,000 tons per day. Circuit 4, 1,000 tons per day. Circuit 5 could be 1,000 tons per day. At 3,500 tons per day, you got to be able to feed that. And so what we're doing now is underground mine planning to be able to feed a larger mill.
Okay, let's say that for simplicity, that you expand the mill by 1,000 tons per day. What, first of all, how long did it take to do, when you took the fourth circuit, how long did it take to do that expansion?
Oh, well, it would be over a year, 12 to 16 months probably. It's a lot of equipment.
I mean, you will have to ramp up mining to feed an expansion. Would that be a combination from both La Preciosa and the Avino mill, or the Avino mine?
Avino's easier to bring more ore out. It's a big mineralized system. And it's profitable, but it's lower grade than La Preciosa. So we would really like to get the highest grade possible through the mill. And so we would look at expanding at La Preciosa where possible.
Former administration wasn't very good for Mexico, but mining Mexico, but it didn't affect you. Have you felt any real differences with Claudia Sheinbaum now, as with her administration compared to the last administration?
Nothing. We got our permits for La Preciosa, so it's a positive. So there's been no change that I'm aware of.
Then my final question is, where do you envision Avino silver and gold mines a year from now?
Well, if you look at on our presentation, we have a 5-year growth target. So next year it has us under 4 million ounces. So if we're going to do between 2.6 and 2.8 this year, that's a 30 to 45% increase based on grade alone. So it's a low cost growth model, and the market loves it. And so we're not having to spend a lot of money to get this growth. And the beauty of the Avino plant is we have 4 independent circuits, so we can change the feed mix. As we stockpile more material from La Preciosa, we can control what goes through our plant, because we want to keep it separate from Avino. So we have the ability to keep it separate because Avino has copper in it. This La Preciosa doesn't. It's 95% pure silver. And that's another reason why we stand out, is there's not too many pure silver plays out there. And our production by metal this year will be 49% silver, 19% gold, and 31% copper. But next year it goes over 60% silver and higher. And as we can speed up underground development so we can take out more ore, we could control that the production by silver can go even higher. It really depends on how long it takes to develop those veins.